I've learned how to analyze the balance sheets, and it's really not that hard. Once you know what you're doing, you know what you're doing. Instead of me buying a coffee, I'll put in £4 into a stock, and little did I know it would go so well. How that works with inflation is that if you put £5,000 in a bank, it would actually be worth the equivalent of 4,200. So that is not what we want to see. We want to see growth, especially over such a long time. But in the stock market, it is growing, and especially in the long term. In America, there's the S&P 500, which is like really crazy gains, bro. If the stock is like $250, you don't have to put in $250, you could put in £2. There may be dips throughout the day, throughout the week, but you know, 3 years from now, it will definitely be up significantly. So that's the main thing that I think people need to understand, that we're not really thinking about today, tomorrow, next week. We're thinking about longer term. Why I wanted to make this video, so that people can know the more safe, accessible side of stocks and things that you can do as a young person. Hello, welcome to my channel. Today I'm going to be doing a bit of a different video, and I asked on my Instagram if people would want this type of content, but basically after seeing all of the GameStop stuff and all of that, like the shorting, people rising against the hedge funders, I thought I would share my expertise. I thought I'd share my knowledge on the stock market and why you should be investing, and that investing isn't only for rich white people. Okay, obviously, you know, I'm 19, this is not financial advice. A little bit about myself: I kind of took an interest in the stock market when I was younger, and I had those apps where you do like a simulation and like trade with fake money. So I did that for a while and learned a lot about the stock market, watched videos, read books, but I just want to give it in a more relatable way, in a way that people can use if they're a beginner, if they don't know what is the stock market, like what are they talking about. As a generation, we kind of have a different view of stocks than like our parents, because back then if you wanted to invest you had to pay a bank, there was monthly fees, there was commission, there was just a lot going on, that it's like it's not really realistic for a normal person to invest. But nowadays we have apps like Freetrade and Trading 212, Etoro, all of these online platforms where there's really low fees, like 5p, and there's no commission. So I've been using Freetrade for about a year now. I have a referral link down below if you want to get a free stock. Just think it's amazing how, you know, they just kind of pioneered low fees, accessibility for people that like are not going into a fancy bank in London and starting one there. One thing that's great as well is you can start with as little as £1. And for me, I personally started with like £15, and I just put it in like I put it in a stock, and then was like too scared to do anything. And then when I next checked on it, it had gone to £20. So that was kind of like, wow, like period. There's a reason why they try to make stocks inaccessible for normal people, and that's because they don't want to see you win. They don't want to see you win. Like, this is how rich people are getting millions and millions of pounds. Just not really well understood, and it should be. I think it's important to note the different types of investing. So when you think of investing, you're probably imagining the candlesticks where it's like red, green, and it's just like crazy, a lot's happening. So that is basically called day trading, where there's, you know, trained professionals. They have 6,000 screens, they wake up at 3 AM and look at the market, they read the news, they're calling their bros, and it's just crazy. Like, that is next level stuff. But you know, obviously I wouldn't recommend that for a beginner, and in general that is the more kind of risky investing, that is like what you imagine when someone says investing. If you want to get like a really high standard of learning, then you can do that. Like, if you wanted to learn how to day trade, which I wouldn't recommend, you can do that. Like, there's courses, there's books, like it's really accessible nowadays, and that's why I wanted to make this. But what I recommend and what the average person should be doing is long-term invest. One of the main reasons I started actually acting on the stock market and putting my money in is that, you know, after COVID-19, the bank's saving account interest rates were really cut, which is, you know, understandable. But inflation remains to be at 3%. So say your money is in the bank, it is losing money, and it's sitting there, all your hard-earned money from working and selling things, whatever you did to get money, it is depreciating every second. But in the stock market, it is growing, and especially in the long term, you know how people say if you invest like £80 a month a stocks ISA, then you'll get £1,000,000 by the time you're 60. So, you know, there's points where it's like, you know, do I have £80 a month? But once you do, then it's like, why not, you know? With the generation that we are in, it's just like not very forward planning, and you know, people always say they regret not saving for their retirement fund. Back to stocks, there's common stocks, which is, you know, what you think of. Shares. So this is where you buy one unit of the company, and your money is, you know, going towards them to help them whatever they need to use that money for. And this is where supply and demand comes in. When Amazon started, there was very low demand for it, so it was really cheap. But now it has skyrocketed exponentially and it's doing amazing. So the demand for it is really high, so their stock price has increased a lot. When you're buying a stock, what you're kind of looking for is that it's being undervalued. So you think that the price that it's currently at is a lot lower than what it should be and will be in like a year or a month or however long. And one thing to think about when you're buying stocks is to think, what price do you want it to be when you sell it, and what percentage growth do you see before you sell it. That's the thing with stocks, unlike the stock market, because it's not really like very concrete, and that's what's kind of scary about it. But if you wait long term, that's where you'll see the biggest growth, especially if you're not putting in a lot of money. Like say you put in £1,000,000 in a stock and then it goes up like 20%, then you can take out your gained money and you're fine. But if you have a little amount of money, then, you know, you taking it out and putting it in, taking it out and putting it in is just not really the best thing in terms of an investment strategy. So what I would recommend is to buy something and hold it. As the time passes, the demand for that stock will increase, so the stock price will increase. So let's do Microsoft. You know, Microsoft, the computers. So back in 2016 when they went public, which means they're on the stock market, they're for one share of their stock. So for Microsoft, originally their share price for one share was $52, and now it is $240.95. But today it has been changing, and this is where you can look at the candlesticks. But, you know, I don't really recommend day trading, which is where, you know, during the day you're just sitting. When it goes down, you like are sad, and it's very like emotionally draining. That's why people say to read books, that you like train your conscious mind. What we want to do is see the growth. So even this month, from the 4th of January, it was $217, and now it's $240. So as you can see, we're making gains. And the longer term that you look, the longer term the growth is. When the first lockdown happened and everything was absolutely crazy, the stock market, everything went down, as we know, recession. And if you had bought it then, when it was only $140, you would have made crazy statistics. Now on Freetrade, what are these numbers? So to look at the more economical side of it all, and the stuff that, you know, is more things that you need to study and learn and understand. But one of the main things you want to look at is the market cap. And obviously, as a very large company, Microsoft has a very massive cap of 1.8 trillion. So that is amazing, that's good. You want it to be high, and there's different stages, mega, small. The dividend yield, that means they pay dividends, which is, you know, a small amount of money that you can get either quarterly, so 4 times a year, or just like once a year. And, you know, that's always nice to see, because they make such a large profit that they're able to give dividends on top of the average stock. So the PE ratio is the price to earnings ratio. So the PE ratio is literally just the share price divided by the earnings per share. So that's just showing how profitable the company is. and you know, we just want it to be as low as possible so that they are doing well. And then you have the high and low, which just tells you like the boundaries of what the price is like when it's high and low. In terms of getting more detailed information, I'd recommend Yahoo Finance, and they have a lot of information there, and that's definitely something that you need to research so you can read the balance sheets, make sure that they're getting more earnings every year, that they're not declining. Just know that there's something that you want to have long term. Another thing that I really wanted to include is about, so ETFs are exchange traded funds, and I think these are the most reliable ones that are the least stressful, honestly. So these are the ones that are lots of companies in one stock, a group of different companies in one stock, so that, you know, it's more diversified, sturdy. There's different ones like the FTSE 100, FTSE 250, and those are just the top 100 or 200 whatever companies in the UK that are performing the best. In America there's the S&P 500, which is like really crazy gains, bro. But yeah, like they just have the top 500 companies, and you know, these days it's usually tech companies, but back in the day it was like lots of different things. It's kind of like, instead of you choosing individual ones, it's like everything. There's also different types of ETFs, like bond ETFs, commodity ETFs, you know, gold, metal, blah blah, sectors, industries like health or fashion, currencies, like forex and all of that, leverage ETFs, and inverse ETFs. LSE, which, you know, before this to me meant London School of Economics, is actually the London Stock Exchange, which is quite funny. But anyway, yeah, I was reading an article that there's no black leadership in any of them, which I was very upset by, because, you know, they love posting Instagram, Black Lives Matter, blah blah blah, but there's not one important person that's black there, so that is kind of sad, but hopefully that will change in the future. And that's also why I've been investing in some African stocks. And yeah, I guess, you know, with stocks, like, it's quite supply and demand, so say there's not good demand, the stock will go down, but it's like I'm still holding it because I want to support them, like just hold for the long term and hope that it goes up. Though there's a very important thing to know with that, as Warren Buffett says, the leader of the stock market, like he's just thought of everything, he's a really historical figure. Basically, if you lose a certain percentage of money, you need to earn more to make up for what you lost. That's why it's good to invest in companies that you think are deserving and ethical and all of that. So those are the main things I think it's important for beginners to know. Definitely don't rush, don't feel like, you know, you need to put in your life savings. And maybe I should mention about the GameStop stuff, because power to the people, but basically with GameStop, it's like, you know, the equivalent of like Argos, like a shop that we know and love. So basically what happened there was that the hedge funders, which are like multi-billion, billion, million, trillion, gazillion, trillion, million rich people who are very immoral, very corrupt, very probably doing all kinds of crazy things, probably buying tigers, like who knows what they're doing. They're just unimaginably rich, and they control a lot of rich people's money and do really, really risky things with it to try and get the biggest gains, because, you know, the more risky you are, the higher chance that you are to gain. Or, you know, you can buy and then hold, or you can just be really risky. Yeah, anyway, so yeah, hedge funders were doing what they do, and they saw GameStop and they were like, this thing is looking bad, so let's short them. So what that means is they saw GameStop and they were like, we want them to close, like they're doing terribly, let's say that they're going to go down. And so they bought loads of stocks from them. In fact, they bought 104%, so they bought all of the stocks and non-existent stocks. They bought all of the stocks to say, you're doing terribly, you're so bad. And then what they wanted to do was to, once they had gone down and they were right, they would make profit from that. You know, they basically make profit from people losing their jobs and probably GameStop closing. On Reddit, where people can discuss their stock, that's a risky platform where everyone's doing more risky things. It's not really about the money, it's about the principle, you know. So everyone saw that and they were like, no, like we don't want this to happen. So there was a revolution of the people uniting. So instantly, because the hedge fund managers had said it was going to go down, but because the demand increased, so everyone was buying it, and then that spiked the price, and that meant that the hedge funders lost billions of pounds. And you know, it's not really that big. Like if you get, you know, 2 million people to buy a £10 stock, then everyone's only spending £10, but that mass of trade volume is changing the price, just making the hedge fund managers, who are so unregulated and just doing whatever they want, it's basically just giving them a taste of their own medicine. A billionaire somewhere has lost like £3 billion. It's like, you know, instead of having a yacht for Christmas, they might just get a kayak. It was just kind of showing how social media has made stocks so much more accessible for the average person, and you know, we can do this, we can, period. So I just wanted to mention, how do I choose my stocks? This is not financial advice, but what I do, I've learned how to analyze the balance sheets, and it's really not that hard. Like, think about like your perception of it. It is not that hard. Once you know what you're doing, you know what you're doing. And so you can just read about the stocks and, you know, read the news. Is there anything happening that's made it low but you see it can be high like 3 months from now? Be stealthy and just, you know, keep on going, and know that you don't have to put in, say one piece of the stock is like $250, you don't have to put in $250, you could put in £2, and then that is, you have like 0.00 point something of a stock. Talking of 0.000 something, I think it's really important to mention to not really engage in penny stocks. So those are the ones that are really cheap. They're like really cheap, like 0.0001p, and then it's like, oh yeah, I'll buy like 10 of them, and it's like you put like, you know, £20 in or something, and you've got, it feels really impressive to say you've got like loads of them, but they're actually not reliable, and these are the ones that are the most vulnerable to day traders and hedge fund managers and all the bankers, because, you know, considering it's so cheap, they can change the demand and all of that really easily. So if you're not in the know with penny stocks, it's a lot more dangerous than the average stock. So definitely do ones that are above like £5, above £4, and ones that are not penny. Once you understand all of the balance sheet terminology, all of that, though the basics I've said, you know, the P ratio, the market cap, the price of yesterday and today, you can see more detailed versions on Yahoo Finance, which is all free, so that's great. So one of the main things I like to do, follow the vibes of financial advisors. And this is where you'll see a lot of people explicitly saying that they're not financial advisors, but on Twitter there are a lot of people who are qualified accountants, qualified finance advisors, who are giving out their information for free, and there's a lot of YouTubers who are giving out their information for free, and obviously everything is at your own risk. But I think with the stock market, it's good to know that in the long term, things will improve, most likely. There may be dips throughout the day, throughout the week, but, you know, 3 years from now, it will definitely be up significantly. So that's the main thing that I think people need to understand, that we're not really thinking about today, tomorrow, next week. We're thinking about longer term. My primary platform to trade is Freetrade, and I've been on Freetrade since it was a little baby. I've been on Freetrade for a long time, and now, you know, the app has got lots of different features. You can see your performance against the stock market, like, you know, just the S&P 500, which is usually the standard for the market, and you can have communities, you can insert money really quickly, and there's no fees like other brokerages have, especially ones that are in real life. So it's just amazing that we have all of this access, and it's just free. It's amazing. And another thing on top of that is that Freetrade gives you a free trade. It's in the name. But yeah, they give you a free trade, a free stock, and you know, that just starts up your little portfolio, so that once you put in your money, you know what it's like to see, you know, the little line of change, and just feel the vibes. I also have an account on Trading 212 and on Etoro, so if you want to use those as well, they're basically the same thing but just different vibes. And Etoro is really good because it has the simulation of day trading if you want to get into that, and it also has cryptocurrency. There's also Coinbase for cryptocurrency. So all of my affiliate links will be down below where we can give each other free stock. You know, this isn't really what I thought I would be making when I did this channel, but I think it's good to give this information that I've learned to others and give you that interest to look into it more yourself and make the most of this time. And you know, one thing people would always say is, oh, millennials always buy coffee, they always buy this, they always buy that. And one of the first things I did was think, instead of me buying a coffee, I'll put in £4 into a stock. And little did I know it would go so well. And then from then I've just been doing great. Online shopping that's available these days in lockdown, I just kind of have given myself a different relationship with money, that, you know, it doesn't have to be always spent. It can be increasing 20%, 30%. All of that considering that savings account interest is currently at 0.01. Your money can be working for you instead of against you. Like, if, as we know, every year things get more expensive, so how that works with inflation is that if you put £5,000 in a bank and did nothing to it, 10 years later it would actually be worth the equivalent of 4,200. So that is not what we want to see. We want to see growth, especially over such a long time. And you know, in maths we learned about compound interest, and this is what it is. We can put it into practice and it is fantastic. So I hope this has engaged some interest in you, and you can see, like, you know, there's people on YouTube who have started with like, you know, who have started with like £500 and they've learnt so much, and now they're like doing crazy, living off their profits, which is just crazy. But I think it's good to think, like, as a young person now, my investments now, like by the time I'm like 25, who knows where they'll be. And that is just like so crazy to think, especially as someone who hasn't grown up wealthy. So yeah. And you know, when you hear about people being like a trust fund baby, this is what they're talking about. Like, when their parents gave birth, they put however much in their bank, and then a few years later, once they're an adult, the money has grown so much. So that's what I want to do for my children, you know. So yeah, I hope this has been really helpful, interesting, intriguing, and that you'll get ready to do a little stock, put a little £10 in there, a little £20 in there, a little £50 in there, and start your future, because the bank is not doing you any favors right now. Your money is losing value as we speak, but that is fine. And of course, you know, keep money in your savings account so that you can use it whenever you need to. But yeah, this has been my stocks introduction video. Please comment if you want anything like this more, because I think this is really interesting and important to talk about. So thanks for watching this video. Thanks for watching this video again, not financial advice, and I'll see you in my next video. Bye!